All right, guys, we are live. We should be live now. Good morning, everybody. Nexgen users, give me a Y in the room if you can hear me. Hopefully coming through loud and clear. Awesome. Nexgen Software Services, Bobby, you're good. Picture coming through better, I hope, than it did in Discord. Howard, nice to see you in here. Good to see you. Fantastic, guys. YouTube is going to be delayed just a little bit. But Gary, if you're not watching the Discord, you won't know that it's delayed. Looks good here, Bobby. Thank you. Awesome. So we're going to go through a couple little things, guys. One thing that is a little bit different in this one, I just did a little test on it, is you can't copy paste a picture directly into the room. You will need to use a screencast link. But the cool thing is once you have that screencast link, I can click on it and it'll bring up that picture, and it should be loud and clear for you guys. So I think we've corrected quite a few problems by doing this. The first one is now everybody can get in. We can do 50, we can do 500, we can do 5,000. The second thing is hopefully the video quality is better now, and you guys can see things a little bit better. Good morning, Luciano. Nice to see you. So I'm excited about that. So a little more clarity, easier to get into. You'll still be able to share each and every one of your links. You'll still be able to pick up on the message. And guys, like I said, I am going to continue to look in Discord every now and then because it always takes a second to transition. It's not only a transition for you guys, but it's also a transition for me. So work with me as we go through. The only challenge that I can see is I guarantee there's going to be some sort of troll that shows up and tries to spoil our party in the chat room. If that happens, just ignore them. We won't respond or go back and forth. But let's get the class going, guys. I wanted to give it a few minutes, get people in here. Hopefully we're good. But I've only got 5 people in the room right now, so, or at least in the chat room. So let's give it just a second. $24. Maybe that was my participants. So only 5 people actually participating so far. Okay, cool. 24 watching. Perfect. So that's about right where we are in the first couple minutes. Everybody's grabbing their coffee, toasting their bagels, doing what they do. But guys, my name is Mark Novak. Welcome to the Next-Gen Education Room. It's great to have you guys here. We're going to be using a couple different things to get you where you need to be. Let's go to that site. Ah, cool. See, I don't have the stream up because if I have the stream up, then I've got this crazy little echo in my ear, and it's going to drive me nuts. So I'm flying blind here without the stream going on my end. I can see it on my computer. I can see where I'm at and what I'm showing, but I'm not going to actually listen to me. Just going to do what I do. Good morning, Safia. Nice to see you this morning. Guys, I'm excited about this. I think that this is a great step in the right direction. So let's do what we do in the morning. First thing I'm going to do is I'm going to go to Forex Factory. Good morning, Jonathan. And I'm going to check news. I'm going to make sure that we're not trading directly into something that may create a big emotional response from people with bigger pockets than I have. Thursday, January 26th. Can't believe we're almost through the first month already. At 8:30 a.m. we had quite a bit of news going on. We had some high impact, some medium impact, and some low impact. And remember, it's not about what the news is. It's not about what they're saying. We don't trade rules, or we don't trade news, we trade rules. So when it's high impact, when it's medium impact, that market has the potential to bounce, to jump, to spike. You just don't want to be in front of something like that typically. So being aware of when that news is coming. Our next one is going to be at 10 a.m., those new home sales. Guys, new home sales has very little to do with trading the S&P or crude oil, but if somebody makes an emotional response based on what the news says, it can mess up our good time. So being aware, write a note down, 10 a.m., new home sales, time to go refill your water, grab a second cup of coffee. Next, we're going to go to the Nexgen education page. And this is where everything that I talk about is going to come from. There really are no secrets with Nexgen. We're excited to give you everything that we have to put you on the path to where you want to be. And there's two sections from the education page that we look at. The first one is the software user guide. This is your NinjaTrader how-to. This is after you download your demo, you open up your software. There's going to be a lot of questions probably about using this brand new platform. And guys, I'm telling you, it's so easy, I can do it. Everything you need, troubleshooting your connections, opening, closing, scaling charts, adding stops and targets, resetting your simulator, market replay. If you want to change the look of your indicators, there's sections dedicated to that. Of course, each and every one of these is here for you to check out, but if you have a question, just raise your hand in class. Let's make sure that you're taken care of for sure. And then the most important one, guys, this screen capture program. When you downloaded your demo, you've got the capture software, and I'm going to give you a quick little run through on this one. This is such an important thing for what we do. Everything about this class relies on a conversation between us, between you and me, and we do that through pictures. Give me 1 second, please. All right. So to use this capture software, it's a pretty simple process. I'm going to click capture, and it's going to give me my crosshairs. If I hang out over one chart, it's going to let me look at one chart. If I click and drag, and this is the most effective way, I click in the upper left-hand corner, and I drag it all the way down to the bottom right. I want to make sure that I'm getting price bars. I want to make sure that I'm getting timestamps. When I release my mouse, I'm going to click on this capture an image, and once I capture that image, it's going to give me an image preview, guys. And this is how you and I have a conversation. You're going to mark up your charts. You're going to say, hey Mark, at this point in time I had odds favorable momentum. The market was moving great to the upside per rule 1. There was nothing in the way per rule 2. So when the market pulled back to 81.65, I went long right here at an area inside of favorable large triggers, just like rule 3 says. And Mark, I took a winner from 73 all the way up to 95 using Fibonacci as a target. And you're going to do that with this call out button. You're going to say rules met. You're going to talk about your entry. You're going to talk about your exit. And you may even talk about how you felt. Were you excited? Were you nervous? Were you anxious? Because all of this information that you give me is going to help me give you feedback on each and everything that you do. My job is to help you read your indicators, to help you understand what you're doing, why you're doing it, where you're doing it. And then once you get this information on the chart, click an upload link, and it's going to give you that link to Screencast. Screencast is getting that picture into the cloud. Once I click copy, I can come straight to my chat box, put that link in there, and it's from that link that you provide. I'm going to click on it here in the classroom. We're going to go to the site, and then I can see exactly what you've done, exactly why you did it, and you and I can have a conversation about that picture perfect, rules met, long trade. that got you profits this morning. So if you need help with your screen capture program, if you need a little help posting in the room, let me know. In the second half of using the capture software is going from posting in the room to posting into the spreadsheet that Nexgen provided you. Each and every time that you take a trade, it's going to come into the spreadsheet. This becomes your trade journal, a place where you can recognize patterns in the market, patterns in yourself, and it's very easy to transfer that picture directly into the spreadsheet. I'm going to paste that screencast address just like I did in the chat room. I'm going to click my Insert tab in the upper left-hand corner, and we're going to change it to a hyperlink. And what this is going to do is it's going to allow us to paste that link into the address bar like you're going to google.com, and then identify what you did. And we'll call that one a perfect trend trade long. Once I click OK, I can come back each and every morning and I can, oh, thanks John, I can come back each and every morning. I can say, well, I took a perfect trend trade long here. What does that look like? So I can do it again today, so I can find that same success today. And that becomes a big part of the study process for you. So if you need help with the capture software, if you need help working that spreadsheet, let me know. That's exactly what I'm here for. And then what we're going to do is I'm going to open up this tutorial link. And this is where all the rules that we talk about, your path to success, comes from. And like John just said, will somebody post a picture in the room for me? One of you guys, let me know. I want to see exactly how this is going to work. Just give me one of those screencast links. It doesn't have to be a trade. It can be anything at all. But if someone will give me a test picture, that'll be great. Hey, Alex G, I see you. Loud and clear. Just anybody listening, do me a favor. Post a picture, and let's just make sure that we're good, that we're on base. Remember, guys, this is the test run moving over from Discord to YouTube, trying to make the screen clearer for you, trying to make the participation easier for you. So from this education page, from the tutorial section, it's going to be a foundational approach. We're going to build off the basics and work our way into more advanced trading. So for the first 30 days, going to focus on one trade, guys. We're going to focus on a high probability trend trade. 30 days focusing on a trade, and I'm going to show you the actual definition. Focusing on a trade when each indicator on every chart agrees for the trade. You're going to have your strongest triggers. You're going to have nothing in the way. You're going to be taking an entry from the area where the market is likely to continue. And this is going to be your focus for the first 30 days, this high probability trend trade. These are the rules that we're going to cover extensively in the first half of class. And we're doing that because as you focus on that high probability trend trade, you're learning to read your indicators. You're learning to be a chart reader. And 90% of what we do every day is just reading our charts, taking the information given to us and waiting for an advantage, for the advantages to be had so that we can enter a trade. Hey, Johan, great test. Johan, will you do me a favor? Will you post a picture in here? Just anything at all. I want to see that you guys can post links. If you try to post a link and it doesn't work, let me know, because we need to make sure that we have all of our settings right where they need to be. So chart reading is going to incorporate 3 essential elements. It's going to be, you just did, all right, and I can't see it. Let me do it this way. All messages are visible. Nope, they are not coming through. So John Novak's going to check on that. He's working tech control for me. Back there, no, Ronald, I didn't. Alex, you did post. Guys, you're amazing, but I'm not catching them just yet. So, we're going to figure this out, guys. I've got it. All messages are visible. Oh, sorry, Ron. Did I say Ronald? Guys, I have to get used to this. Your names have changed a little bit. You're just Ron C. And my old eyes can't see avatars that well, so we're good. All right, so John's going to work on those links for us real quick, and we will get it figured out. Again, this is a test. Sound like the DMV. Or your mom when you're in trouble, right? I only knew my middle name when I'd done something wrong. Hey, Cameron. So when we talk about chart reading, guys, you're going to be able to open up your charts. You're going to be able to recognize where the market is likely to continue, and you'll use that continuation point for an entry. All right, John, you have to approve users that can post links. Nothing is easy. Can I approve them? Let's see if I can approve them from here. Doesn't look like it. All right, so we may have run into our first snag. That's okay. I'm going to keep lecturing. We're going to keep talking. For those of you that are in Discord, and I'm not trying to double dip, but I want to make sure you get the feedback. Without the video, the chat still works in the education room. I'm going to keep it up in a corner of my screen so that if you do need feedback on a trade, put it in there. And I'm going to make sure that everybody gets taken care of today while we work through these things. Sometimes on our quest to make things easier for you, we work a little bit harder to make it happen, but that's okay. I'm excited for the move forward, guys. Our chart reading, where the market is likely to continue, and we're going to use that spot for entries for high probability trend trades. And Ron, I still didn't get your pick. We're going to understand where the market is likely to go. Use these areas for profit targets, and then where the market is likely to stop. And these are areas that may terminate a trend, and this is not only going to keep you from trading into areas where the market may not continue through, but it's also going to give you a very firm anchor to see trend change and set up the ability to take a high probability trend trade. So we're going to focus on 3 rules for the high probability trend trade for the next 20 or 30 minutes. I'm going to go through. We're going to look at them visually. Joel, I have not gotten it. John is working diligently on finding that magic button so you guys can post links. He had no problem, which means that he was already approved. I don't have any problem, which means that I'm approved. We just have to figure out how to get you guys approved. We're going to focus on 3 rules, guys, and we're going to do it on 2 charts. Our first chart that you look at when you are looking for that high probability trend trade is going to be your 13-2 chart. And your 13-2 chart is going to be like a broad stroke of a brush. It's that overall temperature of what the market's doing. And we'll use the most current bar. And this is going to let us identify quite a few things, quite a few advantages as we look for the trade. First, just simply the trend of the market. If the background of your 13-2 chart is green, we're in an uptrend, only looking for rules to be met for high probability trend trades long. If the background on your 13-2 is red, we're in a downtrend, only looking for rules to be met for high probability trend trades short. So really the first advantage that you're going to be able to give yourself off the 13-2 is simply sticking with the trend, making sure that you're not fighting that overall trend of the market. And then both rules 1 and 2 of 3 must be met on a 13-2 before we go to that smaller, faster chart. And rule number 1 is going to have us gauging momentum through strong triggers. And rule number 2 is going to go back to making sure that there are no places where the market is likely to stop. And when these rules are met, that's when you're going to turn your attention to the 5-1 chart, the smaller, faster chart. And we're going to refine that broad stroke of a brush. We're going to take it from that 1 bar event down to maybe 15 or 20 and pinpoint that area where the market is likely to continue. And this is your rule number 3. And you'll be able to identify this continuation point with such accuracy that you're going to wait for the market to come to you with a limit order We're going to identify areas inside of favorable large triggers and just wait for the market to come to us. By doing that, it's going to allow you to reduce your risk. It's also going to allow you to maximize your profit potential. So we're going to take these 3 rules on 2 charts. And then we're going to identify the advantages provided. And when the advantages are present, it's time to take that high probability trend trade. So those strong triggers are going to give us the advantage of momentum. Those no termination conditions give us the advantage of a clear path. And then by waiting for the market to come back on that smaller, faster chart to enter the trade, it's going to provide an entry, the advantage of an entry where the market is likely to continue. So again, from the tutorial section, trend trade rules, there's the wordier version. We're going to focus on each rule. We're going to look at what it looks like, what it means, the advantage provided, and then we're going to be able to move forward from there. So rule number 1 for a high probability trend trade is going to be making sure that we have strong trigger lines. And strong trigger lines mean in an uptrend, small triggers have broken above and away from the large triggers. The large triggers are wide. They're angled in the direction of the trend. Guys, it's this trigger look that lets me know that the odds are favorable for the market to continue up. In a downtrend, when we have that red background, the small triggers will break below and away from the large trigger lines, which are widening, angled in the direction of the trend. It's this space between the trigger lines that lets us know that the odds are favorable for the market to continue down. So when I'm looking at rule number 1 and I'm thinking about the advantage that it gives me, I love to use the term odds favorable momentum. I've got odds favorable momentum in the direction of the trend. We're going to focus on this odds favorable look for the first 30 days, getting the best of the best, because when those small triggers work their way inside of the large, it's a weakening of the large triggers. And when you weaken the large triggers, anything can happen up or down. So for 30 days, as you develop your chart reading skills in an uptrend, going to wait for the small triggers to break away from, accelerate away from those large triggers, letting us know the odds are favorable. And we'll continue looking for opportunities until they return to those large triggers and work their way inside. And in an uptrend, you'll notice on your 13-2 chart, you'll see these tails, these wicks. And this is where price is lower than that mid-band. So when you see these tails or wicks, you're going to see circles on them a lot in the classroom, on historical charts. And these are just potential entries for a high probability trend trade. You'll also see it in the downtrend, waiting for the trigger lines to accelerate until they return, and then potential entries on that 5-1 chart seen on the 13-2. I'm going to follow John's link real quick. If you have a Google account, what is your username and email? Guys, this is going to get you approved to post links, and this is really just a safeguard for the class, because I think most of you are familiar with the internet, and there's a lot of seedy people out there, and they love to post links to things that are going to damage your computer. So John's going to approve each and every one of you. We're going to go through and make sure that as you join the YouTube, brand new demos, we'll have it done on day 1. You more experienced users, yeah, just reach out. Give us those names and email address. If you don't want to put them in the room here, that's okay. You can message John Novak. You can message Tech. You can go put it in the Discord room if you like. Whatever makes you comfortable, but we'll get you approved in there so that you can post links. And then once you're approved, post something in the room for me to see. So Paul, we're testing YouTube because Discord fills up at 50 users. And you guys have told me time and time again that the picture isn't as clear as you'd like it to be. So we're just trying to make things better. We're in this constant state, happy but never satisfied, making sure that you guys get the absolute best education, the best feedback on everything that you do. So. And the picture's crystal clear. I love it. There we go. Awesome. Good stuff. So guys, rule number one, odds favorable momentum, the advantage of a market that's likely to continue in the direction of the trend. Give me a Y in the room if you're with me on that one. Let me know. If you're good, if you need a little clarity, let me know. And John just said it needs to be a Google email, and he apologizes for the pain in the butt, but he didn't get censored on the word ass, so that's a step in the right directions, guy. And that's exactly it. Everything is going to have a challenge, but challenges are overcome, just like anything in life. Worth having's worth working for, right? Rule number two says no termination conditions on a 13-2 chart. A termination condition is a Fibonacci-based indicator that may reverse the market. And you're going to be able to identify these areas on your 13-2 because they are blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can be a cyan divergence low line or a magenta divergence high line, or even a large chart midband if the large triggers remain a full bar away. These are all lines on a chart that you're going to be able to identify, and it's going to become pretty easy for you to recognize when you have the advantage of a clear path or when that advantage has gone away. So you identify through a comparison of the trigger lines and the areas that are reached. So I'm going to go through and we're going to do a little run through on how to identify a termination condition. If you have a question, please ask in the room. If you need a little help, just raise your hand. We'll get you squared away. But it's a two-part process to get you to recognize a termination condition. The first part is that price reaches one of those areas. In this case, it's reached blue Fibonacci support. And when price reaches an area, whether it is support, resistance, 1-to-1s, divergence lines, all you have to do is ask yourself, where are the trigger lines? And if those trigger lines remain above the area of support, well, then we're looking at a termination condition. We've reached an area that may reverse the market, which means that rule number two has not been met because you no longer have the advantage of a clear path. Rule number two says let an area break before trading in the established direction. And an area is broken. Price reaches support above, none of the trigger lines have gone through. When both my small and my large triggers break through an area, we consider that area to be broken. This is when you regain the advantage of a clear path. So no triggers through, termination condition, you've lost your clear path. Both trigger lines through, that termination condition has been broken. Support begins to act as resistance and vice versa, looking for that high probability trend trade once again. And then there's one other scenario when you're coming into these areas where the small triggers will break through with odds favorable momentum, but the large triggers haven't yet followed through the area. This is what I'm going to refer to in classroom as a 50-50 look, because 50% of the triggers are through, 50% are not. You can call it a straddle look, a one on each side look, because it has nothing to do with your odds of success, but everything to do with the look of the trigger lines. And when you have this look, this area of support is an area with the potential to break with that much momentum, but it's an area that hasn't broken yet. So we're going to make sure on these trades that we really focus on having the advantages to get us to the next key Fibonacci area. So price reaches an area, as in resistance. None of the trigger lines have broken through. We've reached an area that may reverse the market, maybe for a moment, maybe for the day. Price pulls all the way back to support. When price reaches support, you'll notice once again that the trigger lines are all above that area of support. We can't go long into resistance that has recently held. We can't go short into support. 90% of what we do throughout the day is going to be reading our indicators and waiting for that advantage. You'll also notice that here at support, the large triggers didn't follow. And these large triggers become a great indicator of what the market's looking to get done. When price accelerates away from these trigger lines, more than a full bar, it tends to snap back and close that gap. So this lets me know that not only is support a termination condition because my trigger lines are above, but this mid-band is going to act as a termination condition as well because the trigger lines didn't follow. Price snaps back and it retests this area of resistance, this magenta high line in the second area of resistance. You can see that the trigger lines have not broken the area. We're at a termination condition once again. And this is what we call a pivot stop out of a divergence high. And when you see this pivot stop out of a divergence high, when it's at a key Fibonacci area, when it's at one of those areas of resistance or support, it's a very strong indication that the market may reverse. And it's this termination condition that creates a full reversal that we call a strong top. And on that same token, a termination condition, price reaches one-to-ones, trigger lines remain above, that creates a full reversal from a low. We call this a strong bottom. You have to have a YouTube page to add your post links. Please post your links in the Discord channel for now, guys. And here we go. This is day one, right? And I apologize for any challenges that we're having on day one, but we're going to work through these and we will make it better, guys. And this was our test run. We wanted to do this run. So worst case scenario, enjoy the heck out of the conversation. Post your questions in here. Post your pictures in Discord. I've got a link to Discord, guys, and I can pop it right up from over there if need be. We're going to figure out how to make this the best for you guys. Termination condition creates a full reversal, strong bottom. This full reversal gives me odds favorable momentum. Rule number one has been met. This, with odds favorable momentum, I haven't reached a key area. Rule number two is met, and there's one of those circles once again, a potential entry on the 5-1. So give me a Y in the room, please, if you're with me. In order to identify a termination condition, price reaches the area. If trigger lines do not break through that area, it's an area that may reverse the market. Guys, this takes away your advantage of a clear path. Sometimes the market will turn not at a key area. And we're going to look at one more termination condition to help you identify change on your smaller, faster chart when it's happening on that larger chart. And it's 3 divergences. And divergence is simply a slowdown. It's a loss of momentum. It uses a MACD-BB indicator. It's written behind the scenes in the software. But what it does is when this negative number prints, when this cyan divergence line from a low or this magenta divergence line from a high prints, it lets me know that momentum isn't following price. Well, when we see that loss of momentum 3 times in a row, it may terminate a trend. It becomes even more powerful when your small trigger lines have worked their way inside of the large triggers, meaning that we've gone from odds favorable to anything can happen. And even more powerful still when that third divergence is higher than the previous from a low or lower than the previous from a high. It's a head and shoulders pattern, just adding fuel to the fire. You'll see this look at a low or this look at a high when on your 13-2 chart. We're getting a turn that doesn't seem to come from an area. So this is going to allow you not only to detect change before it happens on a larger chart, this is also going to become a great management tool as you expand your trading plan, as you begin looking outside of high probability for medium probability. If you enter, for instance, at these one-to-ones at this mid-band, these 3 losses of momentum, that trigger line shift, that higher pivot, lets you know that this move may be potentially over. It gives you an opportunity to manage out with a small win or a small loss or a break-even trade because you can use divergence to identify that change. So far we have rule number 1, the advantage of a market that's likely to continue in the direction of the trend. We've got that strong momentum. We've given ourselves on the 13.2 the advantage of a clear path, not trading into an area that may reverse the market. So guys, now we're going to identify that area where the market is likely to continue. And this is what's going to get you into the trade. When the rules are met on the 13.2, when everything is strong in the direction of the trend, in this case it's an uptrend, when there's absolutely nothing in the way, this is when we're going to make the decision that it's time to take a trade. Bars will be up on the 5-1. Large triggers should be up and strong on the 5-1, preferably trending one on top of the other. You're just going to identify areas inside of favorable large triggers. And these areas can be a mid-band, they can be Fibonacci support or resistance, or one-to-ones. And guys, these are going to be our entry points. We're going to identify them, identify the triggers, but rule number 3 says that we're going to buy or sell a pullback, meaning that we have to wait for the market to come down. Everything's going up and we're going to let it retrace a small bit against that overall trend. And we're going to identify the retracements beginning with a reversal bar. So after all of these green bars in an uptrend, we're going to wait for that first red bar. Or after all those red bars in a downtrend, we're going to wait for that first green bar. When we get it, we're going to identify a window of opportunity, that area where the market is likely to continue. And that window is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. This becomes the area where the market is likely to continue. We've got strong trigger lines indicating momentum, and then we're going to use these areas almost as a backstop, a place for the market to bounce. So when this reversal bar happens, we've identified our window of opportunity. I'm going to right click on my chart right at the top of that window, maybe even a tick or two above, and I'm going to activate a limit order. And one of two things are going to happen. The market's either going to continue in the direction of the trend with all that momentum, and I'll wait for the next great setup, or it's going to do what it typically does, and it's going to retrace right back to that key area inside of favorable large triggers. And at this point, I'm in a long trade. At 79.21, I've entered the market, and once I've entered the market, my first protective stop will go below that window of opportunity. It'll go where the market shouldn't go. If price exceeds the window, well, I no longer want to be in that trade. We always trade with protective stops. But what happens with the advantage of momentum, with the advantage of nothing in the way, a clear path, and with the advantage of entering in an area where the market is likely to continue, guys, this is a trade that's been proven over and over to typically have this result 70 to 80% of the time. 70 to 80% of the time on that highest probability trend trade, you're reaching your profit target. And when price begins to move in the direction of the trade, you can reduce risk from below the window of opportunity to below that pivot going the correct direction. And because you waited for the market to come back to that area of support or resistance inside of favorable large triggers, you've increased your profit potential. So guys, this is what your best to the best look like for an entry is going to be on the 5-1. You see that circle? We talked about that earlier when you're identifying these by putting the two trades together. On your 13.2 with odds favorable momentum with nothing in the way, on your 5-1 you're going to identify your area of support inside of favorable large triggers. And guys, this is going to be, and I'm going to take a picture so I can post it in the class for you. This will be your best of the best look. This will be the look each and every time you get in the market as you take that high probability trend trade. And the square on that tail over here on the 13.2, you can see that it lines up with that entry on the 5-1. Guys, we also saw this exact same setup in the market today. Oops, I don't see where that picture is. I thought I took it. that high probability trend trade. I have a lot of windows. As we scroll back on crude oil, remember we caught this one with the capture software? So we'll do it with Snagit so I can post it in the room. And this is exactly what we're looking for and exactly how you're going to annotate a chart, guys. This is your study tool to be able to go back, to look at what has happened so that you can create the memory of success, so that you can recognize rules met. And here we had that strong trigger look. I'm going to put a checklist on the chart, guys. And this is a checklist that I'm going to make available for you. It'll be in the Discord room. It's in the trade rules section. And I believe John's going to put it on the website as well. But this is nothing more than a high probability trend trade checklist. This is you having the ability to police yourself each and every time you take a trade. Is the market coming from a good top or bottom? Do I have momentum? Do I have a clear path? Did I take my entry in the correct location? If you work your way through the checklist each and every trade, you know you've taken the best of the best. You know that you've given yourself an advantage. And you know you've taken a trade that wins 70 to 80% of the time. So some of you guys are great at math. Anything that wins 70 to 80% of the time, guys, we are going to allow the market to be wrong with dignity 20 to 30% of the time. 20 to 30% of the time, it's going to be a cost of doing business. But when you establish a trade that's been tested, that's been proven to win more than it loses, and you execute this trade because you've practiced it, because you've posted in the room, because you've gotten feedback, what happens is you put yourself in a position to be very methodical, mechanical, rules-based, and you can eliminate that emotion, that anxiety, that fear that typically finds itself working its way into new traders' day. Sorry. So I'm going to give you guys this picture as well. We can take that picture perfect trend trade. I'm going to post it in the room for you. I want you to take this picture perfect trend trade. Go to that spreadsheet. The spreadsheet also is right here in the tutorial section. It's a trade tracking sheet that's been provided to you. It's going to be in your Nexgen study picks folder. Guys, this spreadsheet, every time you take a trade, you should be putting in this first page because this is going to let you come back to see what you've done, to see where you're going. When you post it in the room, I'm going to begin to recognize patterns in you. Some people like to jump in early or late. Some people like to fight termination conditions. It's your participation in the room that's going to help me identify these patterns that you're creating, and then we can work together to get you beyond the things that are causing you trouble. As you take the pictures of the perfect trades, you're building this mental library. This is what my best look is, and you're going to put it in your personal trade setups. As you focus on management, your ability to read charts, flood this spreadsheet with as many pictures as you can every day. And then there's a section that's all about client trades. There's about 70 pictures of a high probability trend trade. These are trades that have been presented in class by you guys. These are Nexgen users taking these great trades, posted them in the room, and then making sure, through the classroom that they are following rules. And we've provided those for you as well. But I'm going to come to my spreadsheet, and because that was the best of the best look, I'm going to go to my favorite looks, and I'm going to put that link in there. I'm going to paste the address, and under text to display, I'm going to put high probability trend trade long. I'm going to call it perfect because I know that this is my best of the best look. And then there's one more. I've hit the 90 mark on my spreadsheet. Remember, the more pictures you take, the more pictures you present, the quicker you're going to get to where you want to be. Is everybody comfortable with that? The rules for a high probability trend trade. Odds favorable momentum. Here we go again, guys. Looks like crude oil's playing really nice today. Odds favorable. No termination conditions. Look at this pullback, and it comes directly to that mid band right there at the large triggers. Works its way down right into the mid band, and then this divergence lets me know that things are slowing just a little bit. Normally this is the time of the day where we're going to start looking at your charts, but we're going to do a lot of chart reading today as we go through this new YouTube setup. Here I do have odds favorable momentum. I have smalls below the large, and I have large that haven't quite broken through that area of support, and a little slowdown here. Everything's pushing down. This is one of those 50-50 trades. We haven't quite broken the area, but it does have the potential to break. If I look at my smaller, faster chart, this divergence lets me know that there is a potential slowdown, which turns this look from a high probability trade to a medium probability trade. And I want to go through and give you that definition, guys, because this is going to be most of your day. And a medium probability trade is defined when most of the indicators line up for a trade, however a small issue exists. And this will be the vast majority of your trades, and when you're executing these medium probability trades, you may take a portion of the position off at the trouble spot, reduce the risk to zero loss level. Your ability to read charts is going to help you identify when a small issue exists. Your ability to recognize that divergence on a smaller, faster chart is going to allow you to manage assertively, and your ability to read your charts is going to help you identify that trouble that's in the way. So as you come through a medium probability scenario, your small issue is this area that hasn't been broken yet. It has the potential to break, but it hasn't yet broken. This slowdown lets me know that it may push up a little bit higher. I'm losing momentum on a smaller chart, but it still pulls back directly to the area of resistance. My 10 to 12 stop initial keeps me safe in most cases on this one. And then as I come down, I can identify this first trouble spot at 51.50, or if I get a second divergence, if that market begins to push up with the second loss of momentum, then you're there. Gary, you put they hide the coupon code at the bottom. I'm not sure exactly what that means. But guys, you can see with momentum, with an area with the potential to break, with everything saying down, all charts agreed that this market has the potential to at least push down to that trouble spot. This becomes your medium probability trade. This becomes a trade that you'll have to make the decision when you're ready through chart reading to add or maybe to not add to your plan. I haven't really watched the market today. I'm going to scroll back just a little bit, and let's start at the beginning of the day. And this is one of the great things about what we do is you can go back and you can back test and you can look and you can see how many times were my rules met and how many times did it work out. So the day starts and we get one of those potential to break but hasn't necessarily broken, and it looks as though the market pushes down just a little bit. That area didn't break. It's a key area. It's a Fibonacci-based indicator. It's that Fibonacci resistance. The large institution guys know these prices just as well as you do. You have the advantage of seeing and knowing what they see. We get one of those pivot stop outs. Price reaches a divergence high. None of the trigger lines break through, guys. This is a termination condition that creates a full reversal. That full reversal gives me odds favorable momentum. I'm going to circle a tail, and we'll see what that looks like on the 5-1. If I can identify where the market's likely to continue through Fibonacci, I can identify where it's likely to go, and because we've reached one-to-ones and no trigger lines have broken through, I've identified an area that may stop the market. No more short trades, even with odds favorable momentum. You see the trigger lines roll. When those trigger lines roll, guys, they never even touch the brakes all the way up to that resistance. And sometimes this is going to happen. Sometimes that market's going to go without you, and you're going to ask yourself, where was my entry? How did I get into this one? Sometimes you're just not going to get it. But if you're patient This termination condition creates a full reversal. This full reversal gives us odds favorable momentum. Hey, Catherine, I see ya. When I have that full reversal, odds favorable momentum, once again, I'll circle that tail. So we've seen two opportunities where the rules are met so far today. And all we're doing is back testing, right? Doing our due diligence. Here, price accelerates away from those trigger lines, hits the mid-band. The large triggers don't follow, guys, and this is that gap theory that we talked about, when the mid-band can be a potential termination condition. Price pulls up, and the large triggers don't follow. And guys, I've got a great picture for that. When price accelerates away from those synthetic triggers too fast, too far, and it reaches one of those areas that we use for termination conditions, it more often than not snaps right back to the triggers. It closes that gap. This doesn't necessarily set up a trade, but what it does for you is it keeps you from looking for long trades right here. Because some people will say, well, I got a reversal, I have odds favorable, I should be looking for a long. But the reality is, with those large triggers not following the trade, it snaps right back to them. And then we see it continue directly to Fibonacci support. Once again, you have the ability to recognize where that market is likely to go. This area creates a full reversal. This full reversal gives us odds favorable momentum. I'm going to grab my drawing tool. I'm going to circle this tail here. We'll see what it looks like, and it may be too soon in the move to be a rules-based entry. And then I also want to take a look at this one, because this may be a great lesson about using divergence on that smaller, faster chart to manage a trade. The market continues up. They get a great run right off the open, right when news presents itself. Once again, guys, let me know if you're with me. Every trigger line is above support. Support holds. Every trigger line is above support. Support holds. Everything is above. Pulls all the way back to that same key area, and you'll notice that the large triggers don't follow. Once again, that's that gap theory. Price snaps right back to the large triggers, at which point we lose momentum and things begin to head down. And then this is right after the open. We're going to see what this key area looks like as price breaks support, pulls right back to resistance. All the trigger lines are below, and the market continues down. And guys, here we are live. Weakened triggers below the areas. Large triggers are a full bar away as evidenced. Here's my reversal bar marker, which means that this bar can come all the way back and form a reversal bar before hitting those large triggers. This is a very key concept. Not looking for a long trade just yet. So the second half of study is going back and looking at those circles. In this case, price pulls back right to that mid-band, right inside of favorable large triggers. And this may be one of those instances where it's a cost of doing business. If you're a brand new trader, if you are a high probability trend trader, guys, there's the potential that you took a small loss on this one. As you begin to recognize your indicators, understanding those advantages, the market loves to present second opportunities. And I want you to see what that looks like. If you entered within the window of opportunity here, and you found yourself stopped out, maybe on the high tick, which is frustrating, but it's going to happen sometimes. All of your triggers remain down. All of your trigger lines remain below the key areas. And you'll notice that with the small triggers, the rolling of the small triggers, you get a pullback directly to a mid-band, directly to resistance with everything pointing down. Guys, this is your second chance entry. And one of the things that I notice over and over is that your entry point here on the one that may not have worked typically coincides with the entry point on the continuation look. So let's give you guys a picture here. When the small triggers roll on the 5-1 and conditions are still met on the 13-2, this is your opportunity to sell or buy a pullback at the area and the small triggers. This is a continuation of a trend trade. And this is going to help you out two ways. Well, maybe you weren't in front of the computer and you missed this one, but you come in, you're like, oh, that was beautiful. Here's your second chance. But it's all dependent on those small triggers rolling. And for those of you that take a trade and then take a trade and then take a trade, this becomes a little bit of a keep you safe. Take your best of the best trade. If it doesn't work, that's okay. Sometimes they don't. Let the conditions work their way into your favor and then look for that second opportunity. I'm going to share this one in the room for you guys. This is a great one to use for entry techniques. This is a great one to use for recognizing change, shifting, getting in the right direction for you. And that one just went in the room. So guys, that was our first one. Let's scroll back and look for our next. Remember, this is the 5-1. This teaches you a little bit that there may not be a perfect entry each and every day. It is nice, isn't it, Paul? Guys, this was that great termination condition. Then all of my trigger lines roll, right? Got a little bit of a split, and the market pulls right back to support. It's above the synthetics, it's below the large. This isn't a high probability trend trade, but as you develop chart reading, you're going to begin to recognize this as a potential spot for more up. But we're going to go back and look for that perfect trade, and there it is right there at 8:30. Remember that the rules are met on the 13-2, right? We'll go take a look at this circle, and we'll put the two together. Here's my circle on the 13-2. Here's my circle on the 5-1. Small trigger lines below the large trigger lines. The large trigger lines are wide. They're angled in the direction of the trend. I haven't reached one of those key areas just yet, so I have no termination conditions. I can identify the area of resistance, the low end of the window right there as price pulls back, and the market continues down with that momentum. And that odds favorable momentum takes us right through key Fibonacci area. High probability trend trade, guys, in its purest form. And then as we scroll back, we'll see what that one looked like. Another one of those split trigger looks. It does pull right back to the large triggers. Not a high probability trend trade look, but certainly a medium probability, beautiful short opportunity as you work through your software, as you begin to focus on the advantages. And now as we get to the live market, guys, prices reach support. Absolutely none of the trigger lines have broken through. The small haven't yet broken. We've reached an area with the potential to reverse the market, potential to stop the market. No more short trades, but it's too soon for long trades. So this is 90% of the time. We're reading our indicators. We're waiting for the advantages. All right, guys, I'm going to take a little break. Watch the market. If a trade presents itself, take it. Post it in Discord. I see that you guys are posting. I'm about to go back and start clicking on each and every one of those links. We're going to start looking. There we go. Sorry, I'm going through Discord and this one. NG, I just put that checklist in the room for you. Paul, if you're capable of posting here, please feel free to post here. We're going to work that direction. If you want to post in Discord absolutely you can post in Discord. I'm going to be checking both. I'm going to take just a moment, refill my water, and then when I'm back, we're going to go through what the live charts are telling us. Termination condition, straight to a termination condition, and back to a termination condition. We're in a holding pattern, waiting for a clear path. I'll be back in 5, guys, and we will start that second hour. All right, guys, I am back in. Here we go. Let's talk about using Fibonacci to identify a market that needs to break out of a range, and then I'm going to get to your pictures, guys. When I look at my 13.2 here, there's a couple things that I notice, and what you're doing right now is you are witnessing the fight between buyers and sellers. You are really kind of seeing how Fibonacci is going to keep you out of these choppy markets, out of these choppy moments, because you can identify a termination condition that wasn't broken, and you can see the sellers push all the way back to that area of support. And when you get to that area of support, guys, your buyers take over. This is a termination condition. Next-gen users aren't looking for the short trade. And the buyers, right here from that Fibonacci area, get all the way up to resistance. Absolutely none of the trigger lines break through resistance. Once again, not looking for a long trade, guys. And when the sellers take over, next-gen users are on the safe side of things. And the sellers get it all the way down to that Fibonacci area. You're watching these guys, lines in the sand, fighting over turf. Next-gen users not looking for shorts into this key area because the rules aren't met. And then once again, directly into that termination condition. We don't get to control the fight, but we can sit on the sidelines and we can identify, well, in order to take a short trade, I've got to get through this bottom section. I've got to clear these areas where buyers have absolutely put a line in the sand, and the same holds true above, guys. So it helps you develop a little bit of patience. It gives you an idea of where those boundaries are and what needs to be broken in order to continue to take trades with the advantage of momentum, with the advantage of a clear path, and with the advantage of, once those rules are met, being able to identify an area of resistance inside of favorable large triggers. Good morning, RJ. I see you in Discord. So guys, I'm going to come through now. I am back from break. Obviously, you can hear me. We're going to go through and we're going to start talking about some of the charts that you guys have posted. If you are brand new here, guys, feel free to ask questions. You can ask it in Discord. You can ask it in this chat. The stream is coming live from YouTube because it provides a little bit of clarity. We can get more people in the room. But I am going back and forth through Discord right now to take a look at the pictures that you guys have posted. And this is what we do in the classroom. It begins with a little bit of a talk about the rules, and then we're going to get right into you guys posting charts, and we'll talk about the rules that are met, rules that aren't met. And I'm scrolling through trying to find where our first post is right now. Some of you guys were up early today. I like it. Carl got us going today. And guys, this is a next-gen user. For those of you that are new, he's gone through the process. He's written a plan. He's identified advantages. And this is a good bottom. The trigger's rolled, which means that he has a termination condition that created a full reversal that provides him odds favorable momentum. He's coming up on that termination condition, but because of the time that he spent with the software, there is distinct advantages here. Great termination condition, odds favorable momentum. Every trigger line on every chart says that this market has the potential to go up, and he takes a picture-perfect entry. You'll notice that he enters the market right at an area of support, right inside of favorable large triggers. And this trade goes on to do great things for him. Carl, absolutely beautiful trade. And then the exact same look, go in the other direction, guys. Welcome to Nexgen. This is what we do. Ron, I've got your test loud and clear. Nice to see you in here. Once again, walking through the process, we have a termination condition that creates a reversal that provides odds favorable momentum. With that odds favorable momentum, looking for a pullback to an area of resistance inside of favorable large triggers. Notice that stop placement was beyond the areas, which means that he stays safe even if it overruns a little bit. Market comes down, he's able to take profits once again. Carl, picture perfect trading. Very nicely done. I'm going to scroll through. I'm going to take a look. This is what we do each and every day, guys. High probability trend trades. The advantage of momentum, the advantage of no termination condition, and being able to pinpoint that area where the market is likely to continue. Alex G. Divergence with very weak triggers, multiple divergences. Remember, guys, 3 divergences in the same price range can create a reversal. When that reversal is created, beautiful pullback right to the area of resistance inside of favorable large triggers. Able to take profits all the way down. Alex G, picture perfect. Looks just like Carl's, and you'll notice there's a great lesson here. When a pivot doesn't come from a key Fibonacci area, that mid-band becomes the first target, becomes a great spot to look for profits. And then when this divergence prints, when this low comes in with a loss of momentum, those trigger lines are hugging. Alex, you take a perfect exit. Nicely done. And Gary, you can post your charts in the Discord, but if you guys will do me a favor, you can post charts in Discord, but chat in YouTube. While we're working through these, I want to go through both. I want to look through all the pictures, but I want to make sure that you guys are getting everything that you need today as we work through these little teething problems. It will be a step in the right direction. Gary, you're taking the exact same trade here. Everything says down, odds favorable momentum, picture perfect entry. Well, actually a little late on the entry. And Gary, I think you waited for market flow confirmation. Nothing wrong with that. But not having divergence on that pullback with that small window of opportunity, either one works. For me, with 2 divergences, 3 divergences above, every trigger line down, and no divergence on the pullback, I'm probably looking for the area on that one rather than waiting for market flow confirmation. But one isn't better than the other. You pay a little bit for confirmation, but you still get into the trade. Nicely done. And then, guys, once again, letting the 13-2 lead the way. And I really appreciate this one. Odds favorable momentum. Everything says down. Everything is going towards the south side. Smalls are outside of the large. Gary takes a picture perfect entry right there at the top. Stop keeps him safe, takes profits, He exits the trades. He was fighting capture. And notice that this is that second chance entry that we talked about earlier. Small triggers roll over. Rather than an exit here, this is a great opportunity for the re-entry, and Gary recognizes that. Beautiful trade, but the 13-2 leads the way. Everything says down. All the triggers are down. All the triggers are down. It's that continuity. It's that every chart agreeing that helps get you right where you need to be. Gary, on the 13-2, we're getting one of those price turns, not from an area. And it pulls all the way back to a mid-band. It pulls all the way back to 1-to-1s. Gary, perfect execution of that gap theory. Perfect execution of understanding that price typically snaps back to the large triggers. So guys, he's using an 8 range, a market flow chart, and he is waiting for a reversal bar to signify that it's time to go down. You'll notice that all of his triggers are down, all of his triggers are below the area, and the 13-2 is a full bar away. Not a high probability trend trade, but a very well done. and then he can identify that trouble spot where those trigger lines are, where the gap is closed, and he can take quick profits. Gary, I think you did a great job on that one. Great execution. NG time. All the charts are red at entry. You're testing with a new ATM strategy. The first one needed adjustment at the pullback and auto trailed down. Two great trades, great start. It's hard to read the 5-1, but if I look at your 13-2 and your 21, everything said down, so you went down. Every chart agreed for the trade, and you took that trade all the way down to Fibonacci support. Beautiful trade. Jonathan. Let's see what we're doing here. Jonathan, we've got small triggers through the area. The large triggers haven't quite broken. As price pulls back, there's no divergence. You take one of those 50-50 trades, and this isn't one that works out. It's okay. It's going to happen sometimes. You're coming from a good top. You've got market rolling, breaking. Just have that 50-50 potential to break, but not quite broken. You take a nice entry right at the area of resistance. And this is one of those medium probability trades, kind of a cost of doing business there. Guys, are you with me in YouTube? I know that we've got participants. I know that we've got people. It's a little awkward today. I apologize for that. Remember, if you want, go to the Discord channel and let me pull it up. From Nexgen's Discord. If you come to the education room, guys, I'm not broadcasting live right now, but I do have access to the chat room. So I'm going to come through. So come to that education page. Everybody in Nexgen is a member of Discord, but what we're doing is we're just getting rid of streaming through here, because what happened is when we reach 50 people, it's keeping you guys from being able to see what we're doing. It's forcing you to go get to that YouTube feed, which I love the YouTube feed. That's where we're at right now. But we're looking for a better way to make things easier for you. We're looking for a better way to get you guys the feedback that you need. And we're looking for a better way, a little more clarity for you guys to get what you need. All right, guys. There's your breakout, isn't it? We identified a choppy market. The buyers smashed through the top of that window. And maybe a potential opportunity right there. If you're a tick or two above support, like the rules say, guys, you probably caught this long. I hope to see a couple pictures of those. Jonathan, waiting for the breakout. Missed the first pullback and take it momentum style all the way up. Nice trade, Jonathan. It breaks the range. The momentum is overwhelming, guys. Not a high probability trend trade. This is what we call a momentum trade. Price smashes through the area. Quick little tap back. Jonathan capitalizes, takes us up to Fibonacci resistance. He knew where the market was likely to go, and he's able to take that entry there. Jonathan, I want to see your chart and my chart. 49.21 are just a shade different. That's okay. Jerry S, long CL, 80.87. Let's look at crude. Whoops. There's my untitled, guys. Ninja Trader will always open up an untitled. I'll get rid of it for the sake of class. If you just saw Jerry's post, he said that he went long at 80.87. He has a market coming from a picture-perfect termination condition. Let's walk through what he sees here. Picture-perfect termination condition, odds favorable momentum. Nope, Paul, it's the exact same software. They should be, when I run my Ninja Trader 8 and 7 right next to each other, it's a mirror image. The only thing that looks different is the platform itself. Jerry, beautiful pullback directly to support inside of favorable large triggers. Easy money this morning. Nice trade, Jerry. And then what do we see now? We see the market's reached an area of resistance. Let's just read indicators. My small are up, my large are up. They're up on the smaller chart, but I don't have the advantage of momentum, nor do I have the advantage of a clear path. So right now we're in a holding pattern. Either this area of resistance will break and we'll continue to look for trend trades in the direction of the trend, or if this area is going to stop the market, if this is going to be a potential turning point, we're going to begin to see change on a smaller, faster chart. It may be in the form of divergences. The small triggers will work their way below the large. The large and the synthetic will both begin to roll. And then you know that a top is in place. And you see the same thing. It's easy to predict, oh, this fib's going to hold. And notice that it pushes up. And with all that downward pressure, they come right back and retest the area. Large triggers didn't follow. We got a great snapback. Alex, everybody has a different plan. And I love that everybody has a different plan. Not everybody is in the same boat. Not everybody has the same level of expertise. Jerry's been with us a lot longer than the average bear. And when the market comes from a beautiful pivot stop out at a key Fibonacci area, when everything is vertical and screaming and the smalls are outside of the large, a little bit of experience goes a long way. It's not a high probability trend trade, is it, Alex? That's divergence. If your trade plan says don't take a 50-50 trade with divergence, well, then this wasn't your trade. But if your trade plan has been established over years of study, posting in the rooms, asking questions, and having the repetitions to identify this as a pattern that repeats itself over and over and over and over, this is a great trade for somebody that isn't you. And it may be your trade one day. I had a conversation with someone yesterday, and they asked me, Mark, are you cool missing a 50-50 that looks like this because of divergence? And my answer was absolutely. Not because it isn't a good trade, but because it's not a trade in my plan. It's not a trade that I have in a written plan that identifies my entries. It doesn't fit my checklist. And guys, I wrote out an example plan. And I had a very, very smart seasoned trader, well over a decade and a half with Nexgen, very successful trader. Tell me once, and these were his exact words, if you don't have a written plan, you don't have a plan. A lot of users tell me, well, I know my plan, but did you write it down? No, I haven't written it down, but I know my plan. Well, these are the same people that are posting 5 different trade looks, 10 different entry conditions. And there's no way that anybody has a plan in their head with that many variations. So, in the beginning, you are encouraged very much to write a very simple plan. And guys, this is a very simple plan. This is an example of what a brand new user can do to identify the perfect entry that gives them the highest chance of success. And notice it says this is an example of how to write a plan. I'm not going to write your plan. But guys, wink, wink, nudge, nudge. You can make this plan your plan. And use the phrase my trade is. My trade is the high probability trend trade. My trade is not Paul's trade. It's not Alex's trade. It's not Jerry's trade, Jonathan's trade. It's not Catherine's trade. It's not John Novak's trade. Guys, this is my trade. And my trade is the high probability trend trade. This is a trade that I know when I execute the rules is going to win 70 to 80% of the time probably. And to enter this trade, I must have the conditions of the checklist met. Guys, I'm holding myself accountable from day one. Absolutely, I will, Joel. Let me get through it on this. It won't let me upload it while it's open. So as soon as I'm done talking about this, I will upload it in Discord, and John's also added it into Discord. I want to say in Trade Rules, but I'll make it easily accessible right there in the education room when I'm done. All you're doing at the beginning of your plan is you're identifying the entry conditions to get you into a trade. What's it going to get to have you pull the trigger? Well, is the market coming from a good top or bottom? If you hit yes, well then you know that you've increased the likelihood, but it's not mandatory for that great trade. It just gives you that extra little push over the edge. If I have odds favorable momentum, if I have no termination conditions, and if I have an area for entry inside of the favorable large triggers, then I'm okay. I'm allowed to pull the trigger. I'm allowed to activate that limit order, guys, and this is what it takes to get me into the trade. This is my picture perfect trade. As your plan evolves, as you go outside of that high probability trend trade, guys, here's John Novak's trading plan. He still uses a checklist for every trend trade. Tops and bottoms, momentum trades. He's identified and established what it's going to take to get him in, even has a checklist to do it. And now not only does he hold himself accountable, now I can hold him accountable for every trade that he posts in this room, because now I know what his rules are. I know what his checklist says. I can say, hey John, your checklist says that you have to have odds favorable momentum, but I noticed that you had weak triggers here. What got you into this trade? Because I'm not telling John that he's wrong for taking a trade, but what we're doing is we're exploring and we're looking for a little bit of an aha moment. We're looking to identify something. Maybe he's just stumbled upon an advantage that's checklist worthy, that's worth going back and studying. Or maybe he just needs a little nudge. Hey, John, follow your checklist. You're not consistent yet. So this is the perfect entry, guys. This is entry conditions. Is everybody good with that? Give me a Y in the room if you're with me, because I really think that writing out your plan is beneficial and it holds you accountable. And when you share your plan with me, you're giving me permission to hold you accountable to your trading plan. And I'm going to go back in Discord and I'm going to find what John's little rant yesterday after we do this. I'm going to take pictures of my perfect entry. Remember we did that today and we put it right in the spreadsheet under favorite looks. What's my perfect entry look like? It looks exactly like this. And it looks exactly like a rules met trade as evidenced by my checklist. Put a couple of those into your plan. This is what it looks like when my rules are met. You want to make sure that every trade you take looks the same, guys. Every trade on your plan should look the same. And if you notice the people that seem to win the most in this room, if you notice the people that are constantly posting winning trades, each and every one of their trades looks the same. If you look at Ron, I'm going to put you on the spot. If you look at Ron's last 50 trades posted, they all look the same. If you look at Jerry's trades, they all look the same. And it's that consistency, following the plan. That's where the success tends to come in. It's allowing the process to create the results. And then as you go outside of high probability, and you work your way into medium probability, maybe those 50-50 trades, guys, you have to put it in your plan. On a 50-50 trade, where the area has the potential to break but hasn't broken, I have to say no divergence will be present because I'm still being conservative. I'm still looking for the best of the best and trying to figure my way around. And I put a picture of that perfect entry for me. On a 50-50 trade with no divergence, I'll take that trade every time. But once divergence prints, once I start losing momentum on that 50-50, I choose not to take that trade. Eventually, I may take that trade. I may wait for market flow confirmation. I may find a set of conditions that creates an advantage that wins more than it loses. But in the beginning, I'm going to say no divergence, and I want my small triggers outside of the large triggers. So you've written what it takes to get you in, high probability. You've written exactly what it takes to get you in medium probability. As your plan grows, let's say you go to the Discord channel and you're looking through the Nexgen. You're like, well, let me look at the trading rules. And there's a trend trade, and you're like, I'm good at this one. I'm comfortable with this trade. It's time to take the next trade. And you say, I love this momentum trade. I see it in classroom all the time. Well, then, guys, you're going to start the process over. My trade is the momentum trade. In order to take this trade, these rules must be met 100%. And you're going to continue that process. I always like to compare learning to day trade like eating an elephant. Everyone heard that old analogy. How do you eat an elephant? One bite at a time, right? That's the only way to do it, or it becomes overwhelming. Once you've established your picture perfect entry, now you're going to begin to work on management. And what we have found over decades is that the more basic you can keep your management plan in the beginning, the easier it is for you to develop a very solid management plan. So if you keep it very mechanical, very methodical, focused on stop placement and movement, based around, I'm all over the place on Discord real quick. Stop placement and movement that's really based around mechanical, methodical, not emotional, and very little to do with chart reading. People find a great level of success for that. So once again, I'm going to use the possessive voice. I'm going to personalize it. I will trade 2 contracts and my initial stop will be 12 ticks, adjusted to below or above that window of opportunity initially. It's going to be move 2 ticks above or below the reversal bar in the direction of my trade. Once again, very mechanical, very methodical. I'm not hoping, I'm not wishing, I'm not wanting, I'm simply following a very detailed plan. I will take profits on my first contract at $100. At that point, I'll move my stop to break even manually. No opinions about what the market's going to do. My first contract has been exited with profit. I go to break even. I have nothing to lose and $100 in the bank. Guys, it makes it easier to hold on for that second target of being $200. And ultimately, it makes it easier to hold on for larger moves. So I'm going to go back initially, and I'm going to put my perfect trend trade in here. This is my entry. This is the best of the best. And then once I have all of these perfect entries, I'm comfortable with it, I'm going to do a very mechanical approach in the beginning, and I've got pictures of these. I'll trade 2 contracts. My initial stop will be outside of that window of opportunity. My targets are predetermined. And then in the management section, my initial stop will be moved 2 ticks above a reversal bar. And at this point in the trade, there's nothing to do. I either get stopped out or my first target gets hit. You can see that the targets are still in place. The entry price is there, but my risk has been reduced dramatically. And then as I go to my third picture of that management plan, I will take profits at $100 on my first contract, at which point I'll move my stop to break even. Guys, this is all lined out for you 100%. On my second target, it's either hit or I'm stopped out break even. And then the last slide of this one, guys, and this is in my spreadsheet. I'll give you each of these pictures. My second target is hit. I'm out of the trade with $300. Everything is very methodical, very mechanical, no room for opinion, no room for hope, anxiety, fear, no wishing, simply a mechanical, methodical approach. So if you like, would you guys like these pictures? I can give them to you. I can post them in the room here if you like. Or we can put them into Discord. There's your first one. Here comes your second one. And guys, it's highlighted in the notes where we are in the plan with the management. So this is your mechanical approach, guys. This kind of takes all of the I hope, I want, I wish out of the equation. And when you take these trades with that mechanical, what you start to do is develop a process, you're welcome, Sophia, where you can look at these perfect trades. You can look at that momentum, and you can say to yourself, with this much momentum, I can hold for that next area on my second contract. So I begin to work a management plan through pictures, through opportunities, taking the mechanical at first and then identifying conditions that let me hold for a longer move. And guys, this is the process. Write a plan for your entry. Get that entry dialed in, and then start working on your management. And then you'll begin to recognize different patterns that happen in the market. Maybe that gap theory. Maybe pivot stop outs happen with a lot of momentum going in. Maybe you begin to recognize, well, this is what the small issue is. These are the small issues that I recognize. And you're using this spreadsheet just to build this great database. And you get this awareness that happens. But in the beginning, focus on that checklist, guys. Focus on that absolute best of the best, everything in your favor moment, so that you can have the advantages coming in. And then, guys, I'm looking for a post that John Novak put in yesterday about the nature of traders and how a lot of people show up for fun, and a lot of people want to be busy, and a lot of people want to take everything because they think if they take everything, well, then surely they're going to get rich, right? Can't lose all of them, even if I'm not following rules. So John put a great note in the room yesterday, and I'm scrolling through Discord because I think it's important that you guys understand this. Almost there. Apologize for the delay. You guys do an amazing job of posting in these rooms, which means that I have a lot of stuff to sort through. But I'm almost there, and you know what? I'm going to share this in the room as well. And this just goes by what we said. John Novak posted yesterday. He said, I've been doing this for 28 years. Since he was 25 years old, John Novak is helping people learn to day trade the markets. And everyone who trades what they think loses in the end. And everyone who follows a plan doesn't mess it up too much and wins. And it's the same thing over and over, guys. We've seen it over and over. The people who trade a plan tend to be successful. The people who deviate from a plan and trade opinion tend to not do so well. You have to make a choice, guys. Do you want to have fun and do what you think, or do you want to make money following the rules? And we try to put you in a position where you can create a rigid set of rules, where you can get feedback on everything you do every day, where you can develop a management plan that suits your needs. And it's a choice. And a lot of people choose fun over the rules. A lot of people want to be busy rather than profitable. And then he says you must use a checklist and stop playing. And he gets the call. And the call is in parentheses, guys. He gets the call. After years of fun, doing it wrong, they lose enough money and time. They become frustrated and they're ready to buckle down. And then they follow a serious plan. And he encourages you, skip the years of pain. Write that plan. Guys, this plan, this checklist, this approach, this came about when I took one of those calls. When a trader reached out to me, he said, Mark, I really need a private session. Work with me for a minute because I'm just getting killed every direction I go. So we looked at his charts, he presented them, we talked about them, we got feedback, and it turned out that he was chasing everything. He was trying to keep busy. So we said, well, let's focus on one trade that's been proven to win more than it loses. Let's focus on one trade. and we wrote out this checklist together. We wrote out this example plan together. And amazing, I got a phone call a month later. He was focused. He was catching the trades that he needed to catch. He was skipping the trades that he didn't need to take anymore. He had made the decision that he had spent enough time, that he had spent enough money, that it was time to do it right. And guys, I'll tell you right now, 99% of traders want to do it wrong first. And I think actually it's healthy to do it wrong first, to go through, to make as many mistakes as you can, to understand. And I'm going to use that as a segue because now you don't have to blow out $10,000 of your money, $50,000 of your money, $100,000 of your money having fun. There are prop firms, Apex, Elite, Top Step. All of these will allow you to pass a combine through their company, to meet an established set of rules, hit a profit target, don't blow it out, just like you were trading live. And when you do pass, well, they fund you and they give you 90% of everything you make. But rather than hoping and trading $100,000 of your money, they charge you a monthly fee. And if you're really ready to go live, if you're really ready to trade live, doesn't it make sense to use their $100,000 instead of your $100,000? So look through these, guys. There's a lot of chat about it in the traders room. I don't work for any of these companies, but I use one of them. I've got an Apex Trader account, and it really is. It's a no-brainer. What's the magic phrase? The OPM, the other people's money. All right, guys. So I wanted to throw that out there. Let's take a look. You guys are still posting pictures in Discord. I love it. I appreciate it. Keep them coming, please, because the more you guys post, the more you guys talk, the more we have to talk about. This is Yuri. Let's see what Yuri's doing. On a 13-2, he has a termination condition. That termination condition creates a full reversal. That full reversal gives him odds favorable momentum. What a great way to start looking for a high probability trend trade. Yuri has no divergence. This is really almost a momentum style trade. It pulls right back to the mid band and the 1-to-1s. Everything says down. Guys, this is the first opportunity. When you're getting a termination condition, when the rules haven't been met perfectly, there's usually an opportunity to get in the direction of the trade. Yuri, you nailed it. Absolutely beautiful execution on that one. Jonathan says, you know what? Yuri's not the only one. Jonathan, you take the same entry, and when it reaches the mid band, guys, remember, we're not just talking about entries. Let's talk about management as well. Jason, do me a favor. If you'll post it in Discord, and I apologize for this. So we went to the YouTube feed today, for those of you that are just joining us, because it's certainly a lot more clear than Discord was. There's no limits on how many people can view it. But right now we're working through getting through the bugs of you guys being able to post your charts in here. And Jason, right now it's not letting me see your screencast link. So if you wouldn't mind posting it in Discord, I've got it up on another monitor so I can watch it. I will give you all the feedback I can. Thank you. I'm glad that you posted that. Guys, I'm not ignoring anybody. My favorite part of the day is looking at what you guys are doing. So I want each and every one of your charts. Jonathan, little lesson here, and this is a good one too. And let's just do some basic chart reading. Well, we're not coming from a key area here, right? This is one of those pivots kind of in space, which means that this midband, that's your first target, especially when we're beyond all of those areas and the large triggers remain above them. And then we talk about that gap theory again. Remember, when the midband is reached and those large triggers are more than a full bar away, more often than not, price snaps right back to those large triggers. So if you take this trade, that little bit of chart reading gives you an amazing target right down there at 40.50. And the cool thing is that you can just take profits when those large triggers aren't following. Take your money and then wait for that next best, because if this is really going to be a top, it's going to continue down and probably set up a trend trade. And if that mid band really is going to be a termination, if those large triggers remain above, it keeps you from giving away quite so much. Great picture, Jonathan. I hope that made sense on a management stand. And I hope the rest of you, if you have a question about someone else's chart, the feedback's not exclusively to the owner. It's for everybody. So feel free. And Jason, just making sure that you post in the education room. That's the feed that I'm following right now. So if you post it in the traders room, I'm not going to see that one. I do have the education room up. Gary, you say you feel like you're listening to yesterday's broadcast even though it says January 26th. You're not. You're getting me live. But what is happening is you're hearing the exact same message. Guys, my message has been consistent for years. My message has been consistent. Get the advantage of momentum. Nothing in the way. Pull back to an area inside of favorable large triggers. Give yourself the advantage. And we just talk about and reinforce over and over those advantages. Crude oil has reached resistance. None of the trigger lines have broken through. We know it's a termination condition. And as it pulls right back to support, none of my trigger lines are broken through. If it's really going to be a top, guys, that market's going to reverse. Everything's going to go down. If this area of support is going to hold because all of my trigger lines are above it, the market may continue up. So we're just going to wait. Holding pattern on crude, right? Waiting for those advantages. Area with the potential to break. One divergence pushes to an entry. The market comes down. We get a second divergence. The area hasn't broken yet. And it starts to waffle a little bit. Now we have 1, 2, 3, 4 divergences. I got you, Jason. You're next. Thank you for that. I appreciate it. So what do we know? We know that the trend may terminate at least a little bit. In the meantime, now we're pulling right into a midband. We're pulling right into resistance. And notice how these large triggers are still down. Notice how they're still well below the area. I'm not saying that there's a short trade right off of resistance. But guys, it's not time to go long yet. Let's wait and let's let the market kind of sort itself out. Jason, let's see what you did, bud. And guys, I'm also going to encourage you. Yikes, I got black screen. Let's try this again. Oh, it's loading. I'm always open to feedback. I'm always open to your 2 cents. It doesn't mean I'm going to change everything based on your feedback, but it's important for me to hear. You guys were telling me that Discord wasn't as clear as it could possibly be. So we started working on a solution. People tell me, well, I need this. We started working on solution. And sometimes even just the way I approach something. You guys give me great feedback. We see what clicks, and that works its way into what we're doing. Jason, let's see what you did here. I'm going to start on your 13.2. That odds favorable momentum doesn't pan out, right? Right into the mid-band. Let me see where we're at here. And we get that change. And the one thing to notice is every trigger line has turned to go in direction. Odds favorable, hadn't reached the area yet. Odds favorable momentum. And then Jason says, I'm going to take advantage of that on a pullback right to the mid-band, right at that support, that snap back to the large triggers. Jason, this is absolutely beautiful. Great execution. And then I love this. He takes his first profits at the trouble area. And then he just waits. This is amazing management. First profits at the trouble area. Guys, look at this. He gets a slowdown. Look at his trigger line location. Everything is above support. Jason's reading his indicators and he said, hey, you know what? This support's likely to hold. All of my triggers are up. All of my triggers are through the area. I'm going to hold this one until it tells me that it shouldn't. And then he gets to that next key area. He has weak triggers. Nothing's gone through. And then he takes an exit. Jason, I think you did this absolutely beautifully. And I think that that read on the hold is amazing. Great job on that. Thank you. I love seeing it because not only did you take the perfect entry, you managed that one and everything is logical that you did. That hold was amazing. Some people will even add on at this area. Take quick profits again at the trouble spot, just like you did. Very well done. And here we go. We see it again. Pivot from beyond the area, pulls directly into resistance, right? Too soon for longs. These divergences on the 5-1 got us right to that area, likely to stop the market. Notice that the large triggers didn't follow. Very key. 1, 2 areas, those large triggers remain below. If I pan in a little bit, guys, 40.38 is a very likely area for this market to continue to, based on a pivot not coming from the area. They come and retest resistance. The sellers recognize it, and right to that area of support, finishing the move. If you have any doubts in your mind whether or not Fibonacci is used by the people that move the markets, watch it over and over. Scroll back, look at it. Now we have odds favorable. We're coming through that key area, that pivot stop out. It's what we call a 50-50. Can't we identify where the market is likely to continue in the event of a pullback with odds favorable, no termination conditions, area of resistance inside of favorable large triggers? Guys, where's my window of opportunity? From that mid-band to resistance, right? If you start thinking about every trade as the trade sets up, you begin to work through things logically. And this one looks like it wants to go, but if price retraces to 37.99, go through that order of operations for termination conditions. If price retraces to this area of resistance, where will the trigger lines be when it gets there? Every trigger line will be below, right? Every trigger line will be below that area of resistance, and therefore that area is likely to stop the market. That area of resistance lines up with an area of resistance inside of favorable large triggers on the 5-1. Do you see how we're putting our chart reading together, beginning to recognize areas where the market may continue, areas where the market may stop, and then even areas where the market may go if we get that continuation opportunity. Guys, this is what we do every day at Nexgen. Every day we're looking at our indicators, we're reading them, we're looking for advantages, we're identifying key areas, and we're going through a process in our head. If this happens, this is what it means. My chart reading tells me this is where I'm likely to stop, this is where I'm likely to go. And then when I reach that key Fibonacci area, none of the trigger lines break through. I go right back into that holding pattern of waiting for this area to break, or waiting for the market to roll to say that we've reached an area that may be a potential bottom. Resistance holds once again. There's that 50-50 off a termination condition. We've reached a mid-band. The large triggers haven't broken, but the smalls have. No divergence on the 5-1. It's still a 50-50 trade. Guys, if you took this trade from the mid-band, your stop was outside the window of opportunity until a reversal bar. We've identified a trouble spot, great opportunity to take quick profits. And if that divergence prints, if that negative number becomes true here, well, then the conditions have changed a little bit, haven't they? And you can see why in the very beginning when we talk about that plan, we talk about making sure that you have the best possible entry on the 5-1. Because areas with the potential to break, if this divergence is true, then the market's likely to push up a little bit more. But if this divergence isn't true and you're in this trade, your stop's in, then the market's likely to continue down. You're witnessing the fight right here at the key area. And we'll let it pan out. Does that make sense to everybody? The market is literally trading right on top of an area with the potential to break because of odds favorable momentum. There was an entry opportunity right there around 16. Your stop would be somewhere around 26. Divergence was not true. Guys, that was your $200 move right there. If you were in at 16, nope, that was your $100 move. At which point, you've already got money in the bank. Maybe you're break even already, absolutely nothing to lose, while the market tries to figure out. Does that make sense to everybody? We're just reading our indicators in the moment. We have momentum. We have a great termination condition that creates a full reversal. And we have the ability to identify an area that hasn't broken but has the potential. If you took the entry, that divergence, if you won't take a 50-50 trade with divergence, is a potential exit. It depends on what your plan says. Yuri taking the same trade, 50-50. Beautiful entry. You'll notice everything that we just talked about, Yuri has put into practice. Termination condition creates a full reversal, gives us a 50-50 trade. No divergence on the pullback. First profit target at 81.06, right? Gary, are you on the live? Second target in place, but if the conditions change. Guys, I'm going to go to YouTube real quick, and it may create a little funky echo. Gary, did you click on the live broadcast right here? Or did you go to yesterday's room? From the home page, the most current will always be right here. Can you hear me, Gary? Let's see if we can. Home page. That's today. I'm going to put this picture in the room real quick. And I'll put that in Discord as well, guys. This is just a little teething problem, getting everybody up to speed, making sure that everybody's good where they're at. So let's see what happened on that 50-50. What do you think, guys? 50-50 trade, large triggers remained almost a full bar away. If you took the first entry, divergence, hey, good morning, Christy. Divergence on the 50-50 takes you out of the trade. Exactly like we talked through. Yuri posted a picture of the exact same trade. He was in at 16. He took his first profits at 6, probably went break even, made $100, nothing to lose on the second, and now we're waiting to see what that market wants to do. Does that make sense to everybody? All you're going to do all day long is we're going to read charts, guys. It's good to see you, Chris. How's things, man? price reaches 1-to-1s. Trigger lines don't break. Once again, we see it, right? We haven't gotten a reversal yet. Even though we've reached an area of support, living the dream in Sarasota. I was there a couple weeks ago. We could have met up and had a beer. John and I played a little bit of golf. Actually, we played a lot of golf over a few days. Sarasota is definitely a dream spot. It's very nice. If this bottom is going to be a bottom, these triggers are going to roll. You can see the large is beginning. The smalls have changed direction. I'll be back. And now we're starting to see that change. Now we have a reversal. Smalls are getting above the large. Things are beginning to roll over here. But we're not going to stop. We're not going to stop looking to make sure that we have a clear path. Jorge, do I have tick replay enabled on my NT8 13.251 charts? I ask because your fibs on the 13.2 do not match as well. If you have them enabled, if you have tick replay enabled, let me find my picture. And this will help you guys out. This will give a little bit of clarity, I think. So Jorge, when you come into this, what Fibonacci levels? If this is your 13.2 and tick replay on NinjaTrader 8 is not enabled, you're going to see the 13.2 fib. You're going to see the native fib, and that's really going to be it, right? If you have it enabled, you're going to see these synthetic fibs. You're going to see the ones from the 5.1. You're going to see the one from the 21. So it depends on what you're looking at. With it enabled, this is going to be your look. Without it enabled, you're only going to see those native fibs. I believe when I have mine running, I've got tick data enabled because I'm living the dream with NinjaTrader 8 right now. I really am, and I'm comfortable with it. And I'm really not experiencing crashes. I think it's probably been a week since my last shutdown. I'm always aware that it's a possibility, but I am very much comfortable with what it's doing because, guys, one thing that you have to remember is that the software is exactly the same. The software for NinjaTrader 7 is the exact same software for NinjaTrader 8. The only thing that's different is the platform. So Jorge, little tweaks here and there, tick data, whatnot, will affect the vision, what you're looking at. Did I answer that? Guys, this is your S&P. We're coming from a termination condition that creates a full reversal. Full reversal gives me odds favorable momentum. You can see the native and synthetics on your 13.2, but have less fibs than I see on my 13.2. Okay, with you, Jorge. So one thing, and let me get you guys to the resource page. Before I do that, price reached an area of resistance. Absolutely none of the trigger lines have broken through. Give me 1 second. I've got RJ in Discord. Absolutely none of the trigger lines have broken through there, guys. So this is a termination condition, isn't it? This is an area likely to stop the market. It may reverse it. And we're coming into that little fight right now. If you took a shot at it, you know you have to manage, but it's not a high probability trend trade. Rule number 2 isn't met. Jorge, so what John did last week, I'm sorry, I'm working 3 different rooms right now. Give me just 1 second. From the resource page on the Nexgen website, John installed an installer because there's been a lot of volatility lately. If you run these installers, it's going to give you a template for the 13.2 for the 5.1 that rather than updating fibs every 480 minutes, is going to update your fibs every 120 minutes, making sure that we can stay consistent on there and make sure that we're in a good spot going through. So run those installers with NinjaTrader closed, or maybe John can post a link to the actual files for you. But that's why it looks like I have more fibs than you. I'm updating faster than you. Does that make sense? And of course, if you need a little bit of help, Jason and Tech will get you squared away for sure. And get you squared away. What takes us 10 minutes to do typically takes Jason about 38 seconds. And guys, once again, termination conditions for the win, right? Areas likely to stop the market. Hey, I've got a picture in here. Absolutely cool. And of course, if you need help, don't hesitate. John's saying, here's your fight on that higher time frame, that 21.3. Everything is down into a key area, but everything remains down. Resistance above, coming through. So guys, this is a chart. This is a higher time frame, a 21.3. And we see those same areas on the 13.2. So we can make good decisions, right? You can make good decisions about whether or not you should be going long, about whether or not you should be going short. Let them fight it out. And Jorge, there's those templates for you. He put them on the Discord page. So you can just download those templates and then just come through, right click. And after you download them, it'll replace the old ones. You can pop that 13.2 Renko 2023 and it'll change your update. So once again, guys, here's that area, right? We can identify through Fibonacci. Shouldn't we let them get out of there? Let them get out of there. Let them break. We don't have to be first. We've never had to be first, and that's the best thing about it. Is we can let these guys do all their hard work. We can let them establish a bottom. We can let them create a top. We can let them give us momentum. And more importantly, we can let them break these key areas so that we don't have to hope that they break. Got some very definite lines in the sand right now. And somebody asked me in the Discord, do I run those because I have a strong computer? And if you have a good computer, will NT8 work well? Yuri, Tim, can you get into Discord? I saw that you sent me a friend request. So once you're in Discord, Tim, click on the education room right here under live stream. Are you able to do that? And when you click on the education room, it's going to pull up the chat box for you. And we're kind of working through things right now. We're going through the live view on YouTube, but we can't get the links just yet, so we're coming through. So let me know if you can get there, and let me make sure that you have permission, and maybe that's a factor. So I'm going to scroll down and take a look real quick, Tim, and make sure that you have permission to be where you need to be. And you absolutely do. You're a lifetime member, which means that you should be good. Click that education room link and see if that gets you in there. It won't let you. Can you get to tech from Discord? If you scroll all the way to the bottom, click on tech real quick. And then John just posted the instructions as well. You just tried Discord, you couldn't connect either. Can't connect to Discord or can't connect to the education room? Because Tim, I see you in the education room under Tim 1. So from the education room, Tim, try this, Kevin. Up here, show chat. Because I see you in the room. Right? Click on that chat. There is no video in the education room, Kevin. So if you guys are trying to get live video in the education room, it's not there. We're doing it through YouTube because we have a 50-person limit. We're trying to make things easier for you guys. So Kevin, go to the education room for me. You're obviously watching YouTube, which is good. I've got you here in the comments. If you guys click on that chat box. All right, good, Tim. You can post pictures in that chat room all day long. Hey, Gary. And then I'm going to come back and take a look at them, and we'll talk about them in here. And guys, thank you for posting. Right now, we're trying to make things better for you. And this is exactly what we're trying to do. And there's a little teething problem. Gary, I've gone through every one of them, and I'll go through them again now that I know that I have you here. Every chart that you've posted in Discord, Gary. In Discord, I can see it. If you guys post a chart in YouTube, I can't see it. So if you need me to go through those again, I'll be happy to. I'll scroll up. Guys, you see, we've identified the areas that have to break, right? Support to resistance, to support, to resistance, to support, to resistance. There's no reason for you to get chopped in the market. There's no reason for you to hope. We can identify a clear path, and we can identify when there isn't a clear path. So what does a clear path mean? It means that all of the trigger lines have broken through an area. We haven't seen it above or below. Once again, the market hits that termination condition. Small's below the large are coming down, but guys, we're right at a pivot stop out, right? We're right here. None of my triggers are really anywhere near. All right, Gary. Gary coming in, taking an edge trade, not a high probability trend trade. I like the chart read. Pivot not from an area, straight up to resistance in the 1-to-1s. The large triggers don't follow. You wait for a little confirmation. Take quick profits, Gary. I like it. I think you did a great job on that one. Once again, we have one of those 50-50 style trades, Gary. Smalls are through, the large have not. No divergence, but you wait for that market flow confirmation. Good management, quick profits. When things change, you take your exit. Nicely done, Gary. Same thing here. Everything says down. You take the picture perfect entry. Take your profits down at the trouble spot. And then you identified that continuation spot beautifully. Nice job. I think we had one more of yours. I want to make sure we got all of them. That's that edge trade that we saw. All right. Jeremy. Ignored the termination on the top and got smacked. Yep. I love termination conditions, guys. But they definitely go both ways. And then nice recovery. A little misread, couple ticks gone, that's okay. Pivot, stop out, pivot, stop out. Jeremy says, man, odds are favorable. And off he goes to the races. Great looking trade. Nice recovery, Jeremy. I like it. Gary, you're going to do great. Even without the faster computer, you're doing great. And Chris T, you're absolutely right. One of the things that Gary is phenomenal at, and it's the same thing that we talked about earlier, is Gary wrote out a plan. Gary created checklists, and Gary learned how to give himself this accountability getting into trades. And if you look at Gary's charts, it's paying dividends for sure. Jeremy, once again, I love this one. We saw that odds favorable, 50-50. Beautiful pullback, awesome entry, perfect profits right at the trouble spot. Jeremy, you have put on a little bit of a clinic here. All right, your first entry at 9/11. Jeremy, I hope you're with me here. We do have resistance, but nothing says down yet, especially if you're looking at that 21. Until this trade. And this is where we went through this lesson great yesterday, and I love it. And I'm doing this not necessarily for you, Jeremy. I think you probably know exactly what happened. Is that your best trigger look for shorts? Not yet, right? And that's okay. Over here on your 5-1, the synthetics stayed up. Even over here on the 8 range, the large trigger stayed up. Just a little patience piece. Little patience piece. And then we have those anything can happen triggers, and you have a loss of momentum. You take a shot at it because of the HVA, because of the triggers up. Virtually no risk after the reversal bar. That was definitely worth a shot for continuation, but there was a huge loss of momentum all the way across the board. And for me, that's always a red flag for me. If I don't have that best of the best trigger look, and then I come to my 5-1, I have divergence, but I'm also looking at, notice how the large triggers, Jeremy, I don't know if you've seen this one, maybe John's talked about it in the other room. Those large triggers have already worked below the synthetics. Just a little awareness piece, and then you couple it with that divergence over here on the 5 or on the 8 range, just really slowing down a lot, giving away that advantage of momentum. And then there's that 50-50, right? 50-50 trade. There's no divergence on the pivot. It is a pivot stop out. And it's, yeah, if you keep eyes on it, you'll see it a lot. Guys, that was your potential entry for the first shot. And then with everything down, breaking through, there's your area of resistance inside of favorable large triggers. And that momentum seems to be leading the way, doesn't it? That odds favorable momentum seems to be creating an advantageous scenario. And then, Jeremy, just to kind of reinforce that, you'll see it a little bit here. The large are below the synthetics, the smaller below the large. All the pressure is really pushing down right now. And let's see what they look like over here. As you're coming in, larger below, and then we get those divergences. They're kind of one on top of the other, but divergence on a 50-50. Chris waited for a market flow signal in at 01. Divergence on the trade, waiting for a little Waiting for just a little confirmation. And guys, market flow, let's talk about it. I'm going to pull up a market flow chart real quick just to go with this one, just to give you an idea. Whoops, that was my 21. I'm all over the place, guys. Market flow can be a great confirmation tool. Market flow can help you make a decision to take a trade. There is a very definite cost for confirmation. If the rules are met, the entry area is right up here around 07. Right there at that exact area, market flow gives confirmation. It says, you know what, this 07 area is likely to hold. It gives you a place to put a stop, but that cost of confirmation is typically there's a cost, right? Instead of getting it at 07, you're in at 01. So it may have to change your management plan just a little bit as you go through. You have to really weigh the advantages. And on a trade that needs to be managed, like a 50-50, something assertive, you have to be willing to keep that little bit of risk on there, that little extra risk as you go through. Good stuff. Guys, I just looked down. It's 11:30 in the morning. Holy smokes, that would explain why I'm so darn thirsty. Guys, let's see how this 50-50 works out as the divergence begins to print. There's an awful lot of momentum coming from a great top. There's reasons this market should go down. There's reasons this market should go up. But what I see on my 5-1 now is 1, 2, 3 divergences in the same price range. And my small triggers are inside of my large triggers. I know this from the manual. When I go to the termination conditions section, this is an area that may terminate the trend, right? Using that small chart, gauging the information, seeing what's happening, and identifying advantages and when they begin to turn into potential disadvantages. I'll be back in just a minute, guys. I'm going to take just a few minutes. If you take a trade, post it in Discord for me. If you have a question, post it right in the room. I like to let this last little portion of class work for you. You bailed at first divergence, small profit. Then very well done, Chris, right? Get in, medium probability, things are changing. Make a little money, get out, wait for the perfect trade. I think that the challenges happen when people take a medium probability trade and then they rely on hope rather than chart reading. And this is one of the reasons why for that first 30 days, focusing on the absolute best of the best, it teaches you to understand these changes as they happen. Guys, I'll be back in just a second, and then we'll just wrap up this day, have a good time, finish things. Back in a sec, guys. All right, guys, I'm back, and we're going to go into the home stretch here a little bit. 50-50. Three divergences in the same location. Look at what happens. We have the information on the smaller, faster chart to identify that things are changing on the larger chart. When small triggers break above, we get all that momentum. There's a little stab back right here, but maybe not the best opportunities to get in. And that happens sometimes. Once again, 50-50 with divergence, and that market tends to turn right around. Hopefully you guys are seeing a little bit of a pattern here. Recognizing, I don't know why it's doing that. There we go. I had someone ask me once, hey Mark, and that just last night. So you're telling me if everything looks perfect and there's a 50-50 with divergence, you're not going to take it? You're cool with not taking that trade? And guys, my answer was yes. It was an overwhelming yes, because for me, for my personal trading, for my own pain tolerances, and let's put it that way, because everybody's different. Everybody's going to have a different approach. Everybody's going to feel different about what they're doing, what they're seeing, what they want to do. For me personally, my study, my spreading, my filling up spreadsheets, if you look at the library, this library is about 2 months old right now, and I'm at 2,600 pictures. I'm in a constant state of study, and because I'm in a constant state of study, I'm seeing these instances happen over and over. Over and over I see these 50-50 trades. Over and over I see conditions that make them work. I see conditions that don't give them the best chance of success. So I create and formulate a plan, just like we talked about in the room, that puts me on the side of a trade that wins more than it loses. So we've seen 50-50 with divergence fail, 50-50 with divergence fail. We saw it happen, I want to say, right here on crude oil as well. It doesn't mean that it can't be a great trade. It doesn't mean that there isn't an opportunity for you to potentially make some money with this trade and get out with quick profits like Chris did, manage it assertively. But if you're not at the point in reading your indicators, being able to process what you see at a really high, fast level, that conservative approach initially and then growing from it tends to be the most advantageous route for a new user. And Gary, you say you're waiting for the termination condition to clear, and it may never get there, right? Because since the time of that termination condition, you've had a termination, you've had a termination break, you've had a termination, you've had a termination break, and then you had a 50-50 trade with no divergence, pulling right back to a mid-band. So I think waiting for a termination to break at 58 is really focusing on something that's already in history. We've already seen resistance, support, resistance, support. We've seen what was probably a high probability trend trade not work out. And we've already seen a trend change once again, and now we're coming back. So a lot's happened since this one. Then we're good. So guys, be in the moment, right? What do your indicators say now? Alex, first glance, absolutely beautiful. Termination, right? Divergence on every chart. Strong trigger lines. 50-50 with divergence didn't work out. Everything turns, you take a perfect entry, make money all the way down. Hasn't really changed, but it's a 50-50 as well. You get in, that divergence gets you out. Alex, perfect execution. And then Claire, you need help? I got you. Let me see real quick. Claire, are you in Are you in YouTube as well? Will you give me a Y in here if you are? Because if you're not, then I need to reach out to Claire and make sure that she gets it. You're welcome, Alex. All right, Claire, you changed your name. It's all right. I just gave up your secret identity. All right, so you're just trying to get the text to display, right? So you're almost there. You are 90% of the way. So I'm going to right click and I can paste. That's the YouTube one. You'll notice that once you use this link a couple times, it will default down here to the link. So I'm going to paste the address here, and then Claire, all you need to do is left click and highlight that. And then type what you want right up here. So you have to highlight it, or you have to, with your cursor there, hit the backspace button to get rid of what's already there. And then once you do that, just click OK, and it'll pop it in. So if you want to give that a try and let me know if it works for you, and if it doesn't, we'll figure out why. Look to my coming at the first. I don't know what that means. That's probably a joke I don't get. There's a lot of those. John Novak posted in here. 50-50, right? Two higher divergences. Here's a 50-50 on the pullback. No divergence here is good, is exactly what he's saying. Same conversation that we've been having. So let's take a look and see. Guys, there's that 50-50 with no divergence, and look at the direction the market's going. Everything that we do revolves around patterns, right? Everything that we do revolves around taking the time to study, to post in class, to ask a question, getting you where you want to be. It's still a medium probability trade. But let's go through the super conservative. I don't remember where his entry was, but I'm assuming it was somewhere right around here, 37.25, which means that he was able to take $100 right here, go to break even, able to take $200 right here, out of the trade, $300 in a medium probability trade before the market ever turns against him. It's a medium probability trade. We're going to manage it assertively. He may say, because with this momentum, because of the higher divergences, if divergence prints, I'm out of the trade. If divergence never prints, I'm going to carry it to the next level. And that depends on your management plan. So very mechanical, you're already out with $300 in the bank on a 2-lot. If you're the kind of person that likes to hold, well, now you have a 50-50 trade with divergence. We'll see what happens. Gary, you're asking, was this a divergence? And Gary, the answer is no. So when we look at divergence, you got it? Awesome. Do you want me to call you Claire or Catherine? I'm okay with either. It's throwing me off a little bit, seeing everybody's Discord then coming in here. I realize it kills anonymity a little bit. Gary, when divergence is true, a negative number prints, and a divergence line prints. So this is divergence. No negative number, right? No negative number, no divergence. This one works beautifully. Right up. Look at that. Divergence prints. And it just rocketed right past, didn't it? That loss of momentum is pushing it lower. Does that make sense, Gary? Does that make sense to anybody curious about divergence? What does divergence mean? It means that we're losing momentum. And if we're losing momentum, we're losing advantages. Awesome. Jeremy, you gave it a shot. Beautiful. A lot of what I say revolves around what happens in this classroom, guys. 50-50. You waited for confirmation, it looks like. Yep. Get into the trade. Quick profits, divergence prints, you're out of the trade. Medium probability trades require aggressive management. Jeremy, you see with that 50-50 and absolutely no divergence, you could have waited just a little bit for that pullback. I like that you waited for the up bar. Perfect management. And that's what it is, guys. The first step, identify your entry. The second step, learn how to manage that trade. You're going to do that through your spreadsheet, through taking pictures, through posting in class, through getting feedback on anything and everything that you do. If you write your rules on your chart, that's not the rules picture. If you write your rules on the chart as a brand new user, and let me kind of clarify. Jeremy and I have been talking about charts together for a couple years now. I understand exactly what he's looking at, what he's thinking, the direction he's going, but he still annotates if he does something. In the very beginning, if you'll give me that great information, if you'll tell me why you got in, whoops, that was the wrong picture. Identify your rules being met, identify your entry, identify your target. If you give me this feedback, the rules that you're trading in the beginning, what happens is I'm able to give you feedback on your ability to follow your rules. Using the spreadsheet is going to help immensely, guys. And if you go to the Nexgen tutorial section, there's an area on market replay that really identifies your path. The step-by-step path to becoming a confident trader ASAP. I've pretty much soapbox broken record the idea that you need to write a plan, that you need to put on paper exactly what it's going to take to get you in. That step is posting your trades in class, guys, getting that feedback. Everything that you do, get that feedback. What happened? What did you see? Maybe I see something that you missed. Let's talk about it. Gary gave us a great example of that just a second ago. He posted a question in class on a picture, and then we got a great little lesson, a little clarity on it, and hopefully he gets to move forward from that. Maybe somebody else gets to move forward from your great question. Post in class, track in the spreadsheet. Guys, I'm going to show you this spreadsheet real quick. It's not mine to give away. Let me throw that out there first. But she was nice enough to let me share it with you guys in class. And this is from a Nexgen client. Her and her husband trade together. They use the indicators. They formulated a plan. Her first page of her spreadsheet is her rules, conditions, her management. Everything is right there on one sheet. Her tracking sheet, and this is probably the most efficient use of a spreadsheet that I've seen. Every trade that she's taken, how she felt when she took it, if there's any notes that need to go on there, and how her profit targets were reached or weren't reached. And what happens is when you look at this, is broke rules tends to correspond with a little nervous, a little jumpy, felt a little bad. And then she's starting to work into her trades, client trade examples, how she's feeling, second trade sheet. But that's probably one of the best uses of this spreadsheet that I've seen in a while. And it's nothing new, and it's nothing that's going to change what you should have already been doing. Her information isn't going to make you a better trader, but her use of the sheet, just seeing how thorough she is with everything that she does, keeping that trade journal, puts her on the path to success, to becoming a confident trader ASAP. So we're going to learn the trigger lines, the rules for when it's okay to trade, the high probability trend trade, the momentum trade, an HVA trade. No matter which trade you're looking to execute as part of your plan, it's important that you understand the rules for it, that you can identify them visually, and you can write them down on a piece of paper, that you can annotate them on your charts. Simulate those rules daily. Post pictures in class until you're sure you have the correct rules. Not until you're always winning your trades, but until you're taking the correct trades. Don't practice the wrong trades, guys. It's a muscle memory thing. If you get in the habit of, well, it's just simulator, I'll fight triggers. Well, it's just simulator, I'll jump in because that green P&L number gives me a dopamine kick. You're practicing long-term failure. Simplify your plan. Start small, expand from that foundation, and then go and replay the day. If you traded today, let's say you took 4 50-50 trades today. 3 had divergence and 3 of them resulted in losers with the divergence. Well, go back and replay the day and skip those trades that aren't working out for you. Take the trades that give you the highest advantage. Fix your mistakes and learn from them. Take pictures of the correct trades. You can always bring them in. You can always present them in class. I don't care if your picture is from today or from 2004. I'm more than happy to give feedback on it. And repeat this process every day until you're always taking the correct trades. That's your path to becoming a confident trader ASAP. As discussed earlier in the room, 95% of you are going to fight that path. 95% of you are going to try and do it your way. It's not as much fun to wait for the best of the best. Typically, people get so tired of losing that they start to follow rules. That's been my experience. Termination, 3 divergences. Isn't it amazing? Now we're coming in, we're testing the support with odds favorable momentum. All we need is that little bit of break, right? We want to see that area of support give way. We want to see those small triggers come through with odds favorable momentum. Looking for an area inside of favorable large triggers. You don't like the new update because you're not getting filled properly? Which update, Catherine? Maybe there's something that I can help with. Maybe there's something John Novak can help with. The 13.2 triggers on the 5.1, is that the update? Because if there's a template that you liked more, if there's something that you don't particularly care for, you're not obligated to use it. You're definitely not. And if you can't find the template that you had before, we'll find it. We'll help you find it. But to give you an idea, everybody likes something different. And I don't know. I'm just looking for one in the trader's room real quick. Just to give you an idea. Some people like the looks that we had 15 years ago. And they built a plan around that look. They built a plan around that chart. They built a plan around what made them comfortable. Guys, this is a Nexgen user. It's trade from today. It's an absolutely beautiful long on the S&P. Revolves around trigger line location, support, exit conditions. Everything's there. So Catherine, let us know what we can do to help you to get you back to where you were comfortable. It's the one that's on the resource page. Then if it's this one, if it's the latest update that you like, just run the installers. Is it the 13.2 large triggers that you don't care for? Can you tell me what changed, and then we'll get you back to where you were. Bobby T, looking at a 50-50 trade, right? It's always weird. I can never get my mouse over there with this style. There we go. Small's above the large are wide, but they haven't broken through really 1, 2, 3 areas. You get that loss of momentum. Bobby, you jump in pretty high here. I'm not sure what made you want to take that entry. Your entry would have been down here at 50. You're 5 ticks above it with the loss of momentum on a 50-50. I think you managed it well. You were able to make some money on it. Definitely, probably a little less than medium probability. You've got multiple areas that haven't broken yet. Your smalls are right up against. You've had a loss of momentum a couple times over. And that entry, it just never even made it down to that area of support inside. I love a winner, guys. I always love a winner. But how many times is this 55 entry kind of in the middle of everything going to push all the way down to 48? And are you going to be able to sit through that? And are you going to be comfortable keeping a stop 15 ticks below? Well, even the first. But what I look at, and let me see if I can take a picture of the picture. Let's make that large one more time, Bobby. And let me just show you what I see. Definitely a 50-50 trade, right? Sometimes I count areas. These are all of the areas that have the potential to break. Oh, okay. Right with you. So 3 areas that haven't quite broken. You still have pretty good momentum. Those smalls are outside, Bobby. But this loss of momentum on the 5-1, and you couple it with the smalls that are kind of right on top, your window's down here. Just a couple fundamental things. You didn't get the multiple yet, and I think that your exit with those smalls starting to roll, great exit, great chart reading looking at it. Just a little lower probability because of those losses of momentum. Good job, though. All right, Miss Catherine. I'm going to do this real quick. If I right-click and I go to my indicators, yeah, that happens sometimes. And I go to ProTrader. And hopefully this helps you. Even without having to adjust the template. Let me give you a full picture of it too. Instead of 120 here, you can pop it right back to 480 if you want. And that'll put it back the way it was without you having to download new stuff, adding new templates, stuff like that. If you want to give that a try, go right ahead. It's going to recalculate for you. But that's all that new one did, is it just kind of it changed that time frame from 120 to 480. And if you need help getting back, if that doesn't work for you, if you're anything like me, I will absolutely try to fix things on my own the first time. And I know you guys will find this just hard to believe, but sometimes I can't fix everything. I go straight to Jason. And I'll tell him, man, this is what I tried, and this is how I broke it 10 times more than I should have for you. Can you get me back to normal? And he usually will, and we'll have a great conversation about life in general. So let me know if that works for you, if you're able to get that done. If you're not, grab Jason real quick and just let him fix you, get you straight. But that should be the fix for you, and it should work out well. All right, guys, as we wind down here, what do we see? Smalls haven't really broken through the area yet, right? They're trying, but they haven't. We've already seen a divergence. We've got every trigger line known to man is still above support. Don't have the advantage of a clear path, not yet. Which is tough sometimes because you guys have been sitting on your hands for what, 25 minutes, 30 minutes? Mark, I can't make money if I'm not in a trade. Well, the flip side of that is you can't lose money if you're not in the right trade. All right, I just got a question in Discord. Hey, can you recap today's trades as per our rules? First of all, they're not our rules. They have to be your rules, and that's okay. So if you're talking about the high probability trend trades, I'm not going to go back and recap every one, but let's do it just like this. And we'll do this together on crude. We're going to look for opportunities where we had odds favorable momentum and where we didn't have termination conditions. And if it's one of these 50-50s, I'm going to put it on you to go look at the 5-1 to determine if divergence was present. So we have one right here at about 11.19. Smalls have smashed through. We already knew that this one had divergence. We're not going to mess with it. This mid-band had large triggers, a full bar away, excuse me. So we were trading in determination conditions here, right? And then as we come back, we're looking for that high probability, that best of the best, that odds favorable. A lot of straight line moves today. Right here around 944, rules met 100%, right? So we've got that circle on there. That circle still left over from earlier. And then J right here. Make sure there wasn't divergence, everything coming up. And this is all we're doing is we're just studying. We're going back and taking a look. Where were rules 1 and 2 met on my 13-2 chart? Where did I have a potential entry? And that's all that I'm worried about on the 13-2. And that's the day right there. Where were my potential entries? So the second half of that, as you guys study, is open up your 5-1. There was a potential entry. No divergence. And the market works its way down. So there's one. $300 was reached without question. As we scroll back, this was a 50-50, right? This is one that some users caught and some didn't. If you did take it, another $300. If you avoided it because of the divergence, no worries. You kept yourself safe. You followed your plan, and I think that's a wonderful thing. J, here's a no divergence, pullback right to the mid-band, just below the fibs, right at resistance. There's another one working its way down. 600 on the highest probability so far. There's one more right back to the mid-band, support, hit support at the large triggers. Everything works its way up. Jay, is this helping? That was at 7:16 a.m. This one didn't make the entry, did it? Son of a gun. That one had to go without us. Didn't make that mid-band. Not a trade. And then I believe there was one more. Nope, that was the end of it. Cool. So guys, this isn't just for you guys. This isn't just for Jay. This is for everybody, right? Go back and find your rules met. Put the two together. So Jay, I'm going to put it on you. I just did it on crude oil. Go back and do the exact same on the S&P. Take that high probability trend shade checklist. Make sure that the rules are met. And take a picture and bring them to me tomorrow. Post every one of them in class. All right, Catherine, that worked out. Awesome. Yay. Jason's going to send me a thank you. He's going to say, Mark, I think you're finally getting smart. So Jay, go back on the S&P and do the same thing. Take a look at that and make sure that you're comfortable with it. And go through and post those pictures in class. And let's talk about each and every one of them. Because guys, there's a lot of times where new users take a trade and that trade doesn't win. And they're sitting in front of their computer And they're saying, I had odds favorable momentum. I had no termination conditions. And man, I think I took the perfect entry. Where did I mess up? Where did I go wrong? Hey, Chris, good to see you. Real job. Follow those rules. This will be your real job. But guys, there's something great about taking a trade that doesn't work and then posting it in class. And then once you post it in class, sometimes you find out that you did everything right and it was just a cost of doing business, right? And it's a good mental that helps out. Is that a spot of tea I'm having? I'm not sure what you're talking about. Roger that someday, huh? Oh, what you're hearing? That's my wife cooking breakfast right behind my ear, making sure that all of you guys can hear it too. Martini time in Florida. It's only 9 a.m. where I'm sitting. Guys, that's it. Great class today. Thank you so much for your patience. I know that as we're working into this YouTube, as we are looking at, I wish it was a martini, Tim. As we're making that transition to make the education process better for you guys, thank you so much for your patience today. Thank you for posting in Discord. Before we leave, if you're in here and you did the Discord post and you watched it on YouTube, is it viable? Is that something that you guys think we could do? Could we work through both like this? Give you a clear picture via YouTube, but still give you that platform on Discord. And when you're on Discord, you can post your pictures in here, right? And that's pretty good. But you can also have access to all the other stuff. So we're just trying to figure out what's best for you guys. Bobby, I'm not sure. John and I are going to talk this afternoon and see where we're at. Okay, and then John just said he can't fix posting links here unless you own a YouTube channel. You're going to wait on Nexgen approval for Discord. Chris, we'll get you in there. What's your username in Discord? I'm guessing Chris T. Yeah, well, and Tim, what you may not have to do is log in. If we go side by side, if you post your charts in Discord, you can watch me in YouTube. YouTube just gives us, it's clear. There's no limits. And I know that it may be a little challenging on day one because it's change. And if you're anything like me, change makes you seize up just instantly. But we're going to get it. John and I are going to talk about it. We're going to see what we can do, see what we come up with. Chris T for Discord. Are you in right now, Chris? I don't see you in the lineup. Hold on, let me get lower here. We'll get you squared away and taken care of. Yeah, and Tim, as we develop the game plan, we will continue to update, probably annoyingly, over and over and over again to make sure that you guys are getting exactly what you need. So I appreciate the patience today. I appreciate you guys working with us. I definitely appreciate the participation. I'm going to shut it down. I'm going to have a meeting with my boss, and we're going to keep doing what we're doing to get you squared away. All right, guys. Have a great day. I will see you tomorrow. I'm going to stop the broadcast. We'll see you soon.